Is there any statistics that really stopped you in your 2026 report?
I think probably two bits of data. The first one was around no residential aged care providers entering the market. I think when we look at
So no new
residential aged care providers,
there wasn't a new provider.
no one entering into the market. We had 14 new home care providers enter into the market. I think there was another 49 registered that didn't get funding.
Why do you think that is?
I think it's just the cost to build at the moment. Providers are struggling with the margins in residential aged care and the cost of development.
The Royal Commission said we need 80,000 new beds in the decade. Your data says total operational places rose 802 last year. And the growth came from existing rooms, not new builds. What's got to change?
When a family walks through your door, what they're really asking is, what's going to happen to mum when she gets here? Is she going to keep her strength? Is someone going to help her stay on her feet? Or is she just going to go downhill and stop moving? We call that reablement, a structured program designed to keep residents as strong, mobile and independent as possible. And it works. The Sunbeam Trial, an Australian study across 16 aged care facilities, found a 55% reduction in falls when residents had a proper physio-led strength and balance program. Now, you're already required to deliver allied health. It's a mandatory quality indicator, but there's a difference between ticking that box and having a program that's uniquely yours. Optum Allied Health run a free reablement planning workshop where their team comes on site, reviews your current program, and works with your team to design something specific to your organisation, your brand, and your residents. If you'd like to book a workshop, visit opthealth.com.au/TWS.
Lauren, welcome to Time Well Spent.
Thanks for having me.
We both grew up in Yamba. You were a netballer.
Yeah.
You ran a cafe. Well, sort of.
You're
involved in the running of a cafe. And now you're running the aged care division at a Big Four accounting firm.
Yeah.
How did aged care end up being your thing?
Yeah, I think it's a great question because I didn't think it was going to be my thing. I think I fell into this sector, found a love for it, and then I've stayed and can't imagine working anywhere else. So I feel very privileged to work in this sector. I had an early career in the human services, mainly in government, child protection, was a regulator in that sector as well. And then my husband, he was a professional athlete. He wanted to...
He was a swimmer, right?
He was a swimmer,
Yeah.
and I was a professional athlete as well. So we met at the AIS. He kept swimming. I retired. I entered the workforce. He kept swimming. And then upon his retirement, he wanted to move back home to Yamba. Well, home for me, but he saw it as his second home. He started a cafe at that point in time, and I was looking for a new job.
If I remember,
Yeah.
it was called Lane 4.
Lane 7, close. Lane 7,
Close.
and that was his
I was
Olympic.
a very regular customer of yours
You
then,
were.
Lauren.
Thank you for that.
You're welcome.
Lane 7 after his Olympic lane that he
right.
swam at Beijing. And so then I found myself in hospitality, which was a different experience, not full time, just on the side with Nick. And then there was a job going at a local council at that point in time, and aged care was a portfolio that I picked up. So once again, had no experience in that sort of sector. I took on 2 other portfolios where I was much more confident and experienced. And then there were some challenges with that portfolio. So then I just got my hands really dirty, big 18-month transformation of work. And then from there, I've never left aged care. I just love it. I've been privileged to work, not like with not-for-profits, with Australian Unity, Bolton Clark, with local government. And then I moved into consulting about 5.5 years ago.
Awesome. Yeah. And look, before we get into the numbers of what we're here to talk about today, can you explain what your report is and what the data that goes into it, who reads it, what a KPMG use it for?
Yeah. So we have been doing this for 9 years now. So it's definitely evolved over time. A few years ago, we decided it used to once upon a time just be residential aged care data. We included home care data a few years ago. Then we've added dashboards now. And off the back of this year, we've run a roundtable and a webinar. So a series of roundtables and a webinar as well. So for
What's
us,
the report called?
it's the aged care market analysis.
Yep.
So we all the information is publicly available. We sort of distill the information into what we hope our clients use. And it's not just our clients, it's the broader market use to gain insights, hopefully inform their decision making. A lot of our clients really value it. So I get emails going, when's it coming out? When's it coming out? So I think hopefully the sector finds it quite valuable.
So it's financial data.
It's a range of different data. So there's data around supply, demand, occupancy, lots of financial data as well, but it's not centered around the financials.
Okay, interesting.
Hopefully it's broad.
Okay, so KPMG is also a major merger and acquisition advisor in the aged care. So you've been in the aged care space, so you've been quite busy of late, I would suggest.
Yeah.
Helen Sutherland and Stuart May are quoted in the same report. How do you sit with being the analyst publishing the data and also the firm advising on the deals in the same market?
Yeah, I think for us, we don't put any client data in this report, and we would never. It's all publicly available. So for us, this just creates an overarching view around the market and what's happening. What we've tried to do is make sure that our experts within KPMG are offering a level of insight back to the market around what they're seeing. Hopefully, once again, that adds value to our clients. Helen in particular has been heavily involved. Helen did the webinar that we did about 6 weeks ago and shared some really great insights, and she's been involved in our roundtables as well.
It's a big time of change in aged care. You've got government, you've got lots of M&A activity. Is there any statistics that really stopped you in your 2026 report?
I think probably 2 bits of data. One was, and I mean, it's not surprising though, the first one was around no residential aged care providers entering the market. I think when we look at
no new
residential aged care providers. No one entering into the market. And I think that's really interesting. And we had 14 new home care providers enter into the market. We had more registered, but not then receiving funding. So I think there's a difference there. I think there was another 49 registered that didn't get funding. So I think that's interesting, particularly when we look at supply and demand in resi care.
Why do you think that is?
I think it's just the cost to build at the moment. So I think providers are struggling with the margins in residential aged care and the cost of development. I think the other thing, and if you're a close reader of this report, you would have noticed there's a few tables in there that we added this year around the size of the market and where those providers have landed from operational places in resi aged care and then from a funding point of view in home care. And when you look at that, we know the statistics of this very fragmented market. But when you look at that and you see like, whoa, there is a very small percentage of providers who hold significant market share. And I think when you see that most of the market sits in the very small space, up to 60% are really our smallest providers. So I think for me, when I see that in the data, I always go, oof, I forget sometimes.
It shows there's a trend towards consolidation, right?
And we've seen that year on year. The providers naturally, and if we look at home care, have naturally gotten bigger just through the organic growth, but the ones who have really grown have been through all inorganic growth. Resi care is the same, and we also know that in terms of new build, providers who want to grow are usually acquiring because no one's doing the new developments at the moment. So I think that kind of is driving that as well.
We talk a lot about that in this podcast. What effect do you think, we're both on the boards of community-owned not-for-profits. We're really passionate about regional healthcare. We're both from a small country town with, in Yamba there's one, there's 2 in Maclean. In terms of residential providers. What effect do you think that has on the market from a consumer perspective?
I think a huge effect. I mean, we want people to have choice first and foremost. I'm with you. I'm very passionate about regional, rural and remote providers. I think they're critical to their communities, because there's huge demand in those communities and people want to stay in community, connected to their communities. I think as well they're being employers, and I think that's the other thing that we sometimes forget, that these providers are critical. There is a lot of an economy that's supported in and around those providers. So I think for us, when we look at the market, we want the small providers in the market. A lot of them are specialised providers. A lot of them are ethno-specific providers. We want that level of diversity. We do not want to see those small providers fail.
But they are failing.
Yeah. I think when you look at the data in our report, you can see, particularly in resi care, it's looking better. I think through ENAC, it's certainly been a better story. But I think then once again, the margins that are needed to then reinvest in these providers, and I think, and I know you talk about it a lot, is investing back into that ageing infrastructure that exists in the market as well. I think a lot of providers want to do more. They just don't have the margins to reinvest.
So shifting a little bit now to home care, if that's okay. So we've got 96,709 people on the home care wait list at their approved level, up 41% in a year. Hey, home care funding is up 15% though in the same year. Where's the disconnect?
Yeah, I mean, with support at home, I know some of these changes are meant to be solving some of these issues. We get asked a lot to be reporting around the support at home changes. I know there's already been some review and some revisions to that, particularly around personal care. I think I really want to see some...
And I think in the last couple of days, sorry to interrupt, Dave,
please.
that they've said they're putting off the implementation of price caps until we have more data.
Yeah, which is interesting. And I think as well for the sector, probably a good thing for now, as providers are still trying to manage that in terms of cost to serve. Yeah, I think the whole supply issue, I mean, naturally we're seeing more providers getting bigger, but there's still huge demand, and I think we need to address the demand. Yeah, I think it's definitely a problem. I mean, once again, support at home is meant to be addressing some of these issues, but when we look at the data, yeah, it's still problematic. We still have people waiting for a package, people on a package not at their assessed level. I think it's support at home coming in, people refusing care, the personal care has been an issue. I think it still needs some time. I think the sector needs time to really see these changes embedded.
I think too, and if we take that regional lens as well, support at home in a regional community is different from a metro area. You know, that density that you need.
Yeah.
So if you were talking about, you know, that workforce efficiency, it is really hard for smaller providers to maintain viable support at home businesses with all of the administration burden on them as well.
Yeah.
Have you got any views, I guess, around some nuances that you'd like to see in the regional space?
I think what we're seeing enter into that space is definitely some consolidation around some providers coming together in those areas to drive some efficiencies in the back and middle office. We're seeing some other providers who are coming in to take some of that off them to say, you guys deliver care really well. How do we take some of the back end off to kind of reduce some costs? I think this is a really complicated space for us to manage. Like, I think support at home in terms of then trying to make sure there's equity across all participants who are in the sector so that they're not sucking up all of their package into travel. I think that's a kind of welcome space, but then how that plays out over time, I think is problematic in terms of, you're right, there is such a segmented market and there's such a segmented, I just don't know if a one size fits all in this market is always going to work, particularly when you get to regional, rural and remote and you think about what does choice look like. And I mean,
do you have some ideas of, we're big fans of giving suggestions to the government of how they should do things better. I'm not sure if they listen or not, Ross, but is there ways that, you know, you think about it in your background, the work you do, that you think would make a difference to how we fund regional remote as opposed to, you know, a more dense metro market?
Yeah, I think there's some providers who are doing some great things. I mean, these are not my solutions. I think if you look at Trilogy Care, they're doing some wonderful things in terms of in those markets, thin markets, to try and create place-based solutions. So I think when it comes to those markets, I actually think it needs to be place-based and it needs to be not aged care sector focused. It needs to be what is a holistic view across health, disability, aged care, and how do we come together? And we know some of those limitations exist solely because of the funding models in those different markets. So for me, I think it is
some sort of block funding or...
Yeah, I think so. Just some taking away some of the restrictions that exist naturally because of who the funder is, but a place-based, but across different sectors, I think sometimes is needed. And we talk to providers,
So I was just going to say, Widden Group run a pilot, I believe, where they're trying to integrate, you know, in our region, they've got, you know, Casino Cove or places like that, where they're located very close to hospitals. And I believe Chris Mammarellis, the CEO, spoke about they have a trial where they're sharing resources between the residential homes and the public hospital.
Amazing.
Things like that, right? How you're going to actually serve some communities.
Absolutely.
And having the freedom to, you know, I hate the word innovation in the context of aged care because we say it all the time, but when we regulate ourselves to within an inch of our life, but that is genuine innovation in how they're delivering their care.
Yeah. And I think you really need to go out to see some of those examples around who's doing it and who's trialling different models in terms of what works. I think it's then also enabling providers to do that under the models, the funding, the regulatory environment.
So you just mentioned Trilogy just before, and I'm just going to raise them again. So they didn't exist on the rankings in FY20. Now it's sitting at number 2 as grossing 340 million, 215% CAGR. What does Trilogy tell us about what older Australians actually want?
Yeah, I think for Trilogy, I mean, it's a really interesting model, and it's the self-managed fund. And I think what we've seen over time is the rise of self-managed providers coming through the ranks. Absolutely. And Trilogy is a great example, but other providers as well.
So Trilogy's a self-managed
provider. Yeah.
And Rose, you said 215% CAGR. I'm just a country fella from Maclean now, and I don't know what that means.
I'm going to ask Lauren that one.
Yeah, huge growth. I'm no accountant either. Compound annual growth rate.
Oh, perfect.
So I think for Trilogy, let me just bring them up here. What were they? They are now number 2. Yeah, they were 7 in 2023. So I think as well it just shows also changes in consumer behaviour. I think particularly when packages are going less far, going not as far now, we know that that's going to be important in terms of how it's spent, and looking for providers where they can get more bang for buck, I think is going to be more and more important.
And in layman's terms, or for people maybe in residential more than the home care space, what does self-managed mean? What is the difference between Trilogy and most other providers?
Yeah, so Trilogy, and once again, I'll just speak more plainly outside of Trilogy's model, but essentially it means that the consumer or whoever they then nominate to do it, might be a loved one, are then managing the care. So they're doing a lot what the provider would be doing. So they will be managing the invoices, managing when the care is delivered, not delivered. And so what I know is through some of the data that's coming through those providers is that a lot of the older children are then managing the funds on behalf of the older person, or the older person's doing that themselves. There is an option under some of these models that then when someone decides that they cannot self-manage, so do some of that administrative task, the provider can then take that back on. So I think it's just a different model that's in our sector.
And you said what's driving that, in your view, is, I'm paraphrasing here, but is that with the changes to support at home, the cost of care from a recipient's perspective has increased dramatically, and they're looking to make that money go further. So they're willing to do some of the work themselves to do that.
Yeah, I think prior to support at home, I think there was just, once again, it's an attractive offer because people are getting, if they can then manage a part of the package that was going to a provider themselves and then spend more money on care, then that's a great thing for someone who's able to do that and wants to do that with having more choice and control. I think then under support at home, I actually think that some of these models will be more attractive to a consumer because they will naturally under that then get more care being delivered.
Your colleague, Helen Sutherland, says premium valuations are going to providers with strong tech, clinical governance and workforce compliance. What happens to the providers without those 3 things?
They probably have some work to do, I would say. I think those things are probably critical to any provider in terms of, we know that there's going to need to be further, more investment into the tech and AI space. That's just a given now to drive the level of efficiency that's needed to get the margins, even just to manage the reporting. I think providers are investing in that and looking for, and particularly in AI, particularly what we're seeing in the market is that investment in the back and middle office to drive cost out. Because
the reality seems to be that we've been on this show and people like yourself and many others, Stuart Brown and others, have been crying out that we need to get aged care investable to meet the demand you're speaking about, but that money's not forthcoming. And I don't think as providers, and tell me if you disagree with this, Loz or Rose, but I don't think as providers we can sit on our hands and put our hand out and wait for it because it doesn't appear to be coming. So the tech play is maybe a lever we can have to reduce cost because I think the other thing that would make a lot of sense that's not going to happen is a significant reduction in compliance costs. But, the governments generally bring them in but rarely take them out, right?
I think the providers who have invested in technology and done it and have done it well have been able to drive cost out. So I genuinely think that is
you've seen
yeah,
that,
we've
right?
seen
Yeah.
that, absolutely.
What sort of technologies making genuine savings?
I mean, one provider that I've spoken to has just in the invoicing alone saved 6 figures a year just by putting some AI into the invoicing process. So you hear those examples time and again around where it's driving huge efficiency, which is great.
That's interesting.
Yeah, so I think as well, I mean, we also hear the problems that exist within that space around getting the right vendors and then system integration and then being able to
Cybersecurity risk, right?
Yeah, absolutely. So I think it's a complex space. And I think once again, it's making sure that the providers, particularly the small providers in regional, rural and remote Australia, can actually be investing in this to drive the efficiency that they need to remain sustainable in the sector. And I think a lot of that is around the tech and AI.
Can I jump back into the numbers if that's okay?
Yeah, please.
So of the 636 residential care providers, and we have now 873 supported home providers operating today, how many are going to be standalone in 5 years' time?
I mean, it's hard to tell. I would hope that those providers that are standalone, who want to stay standalone providers, can in a market that supports them to be sustainable. So yes, I absolutely hope that those providers still exist. As I mentioned, those providers are critical to the community. They're critical for choice. I think what we're seeing, though, in terms of trends is that there is more and more consolidation in the market. So small providers, a lot of that is driven by, the rising cost to deliver care, the compliance burden, also then in terms of just ageing infrastructure and the lack of funds that are needed to kind of get the infrastructure where it needs to be. Workforce, I mean, we've worked with a provider before who had huge demand in the residential aged care space but had to shut down a wing because they couldn't get the workforce. Now, the workforce rhetoric hasn't been as kind of prominent in the last few years, but we're still seeing that, particularly when you hit regional, rural and remote Australia, that is still a challenge to get qualified workforce, and or the cost to serve to fly the right capability in is huge.
If you're running or overseeing a service right now, you know how much pressure sits around compliance, consistency, and getting texture-modified meals right. There's little margin for error, and it carries a very real weight for both your team and your residents. The Pure Food Co. is the Australian market leader in texture-modified meals, partnering with more than 500 aged care facilities across the country. They support providers like you to meet compliance requirements while delivering a high standard of consistency and care across every meal. This is one of the ways you can start to reduce complexity in the kitchen and have full confidence that this part of care is being handled properly. If you want to find out more, visit thepurefoodco.com.
So the Royal Commission said we need 80,000 new beds in the decade. Your data says total operational places rose 802 last year. And the growth came from existing rooms, not new builds.
Yeah.
What's got to change? Because in a previous episode, Charles Moore from Baptist Care said we need to open a new aged care, 80 to 100 bed facility every 3 days for the next 20 years.
Yeah.
And that starts, 3 months ago when you interviewed Charles. So what has to change for great builders like Rose and painters, plug, to fix that problem?
Yeah. I think as well, you think about the lead time from turning soil to commissioning a site. I mean, that just can't
design,
happen.
right? Like you've got to design and approval and
and then access to land and where those kind of new facilities are being built. I think one of the things, I don't have the answer to that. I genuinely think at the moment that is a very complex space in terms of access to land, providers' willingness with the margins that exist to actually then invest in that. I think as well, when we look at some of the new builds across the sector, those builds are targeting a high net worth individual, which they need to do to get the margin and the return back on those. And what is going to happen to the rest of the market and other kind of older Australians who need access to care. I think what we don't want is a system with the have and have-nots despite supported places.
Essentially what you're saying, Lauren, is the numbers can work if you're selling to a premium market.
Well, and that's what we're seeing, right, with new builds.
And we're not currently funding for a regional or lower socioeconomic market to be able to build. So,
Well, and a provider needs to get the return on an investment. No one is going to go
It's
and
not
build
a dirty
unless
word, right?
they.
As Mel Argent from Rockpool says,
Absolutely.
profit's not a dirty word.
No one is going to invest unless they get the return. These are businesses that people are running, and you want them to get the margin so they can reinvest. So I think it is a complicated space.
But I think in it, there's an element where the government needs to own that one of the reasons it's not investable is because there is no transparency about what the future income could be, that we are certainly, on the most part, price takers. The department will tell us what the ANAC is.
Yeah.
They'll tell us what things are capped at. If you want to charge more for a room, you're going to have to apply and give reason. And I'm hearing a lot of pushback from the department on some of those rationalisations as well. But I think we, as a sector, aren't treated appropriately by the department to give transparency. If I take you back to the cafe, for instance, say the price of the coffee is always capped. So how are you going to invest in a new coffee machine if you're waiting for the department to tell you what you might be able to buy? How can you do your ROI calculation on it? So I think at the moment that there's lots of different models that can be done well for concessional residents and can be built well and efficiently and to scale. But if we're not giving information to people who might be interested in going down that lens, or in a community organisation who wants to, from a mission point of view, invest in their community, but the only thing you could change at the moment is basically your room price. So it's interesting to see, and the budget's quite new, and we'll do an episode soon on the budget, that we are starting to see some triggers in terms of the accommodation concessions and incentives for over 60% of concessional residents.
The reality is, though, there's two levers. You can make more money or you can spend less money. We talked about AI. We need to find corporate governance and corporate office efficiency. That's for sure. Yeah. But we're also constantly hit with new and more regulation and things to provide, and we don't really seem to be peeling it back as we add more things. Yeah. And then the other lever is you either go like a private aged care model where you're charging, million plus rads or bed price. The maths has got to work at some level, right? So we effectively need more funding, and we probably need to save costs, but
we also need the information, though. Like in terms
of transparent conversation.
We had, how many weeks did we have notice that the new Aged Care Act wasn't coming into effect in July? We've all kind of stopped talking about that. We got that extension, until November. We had a Royal Commission that said we needed to rapidly change the accommodation pricing and we need incentives for new beds. When did that? How many years ago was that? We've had accommodation and pricing review that's finally come out. How long was that taken? Who were the stakeholders that were really, what are the outcomes? And what government department is measuring the success of any of these incentives to say, no, that's not working, we need to do better? Rant over, sorry.
That's rhetorical, right?
That is rhetorical, sorry. Yes, thank you. Unless anyone would like to disagree with me, which you're welcome to do.
No, but I agree, Rose. We've had this conversation with a couple of people is, why do we continue just getting crumbs of information at the last minute? Because the reality is we've got so much tax collected as a country. We have various ways that needs to be directed, one of which is clearly aged care is underfunded. Why can't the politicians and the government and the leaders in our sectors start having honest and transparent conversations about the trade-offs, right? And whether that's, the topical one at the moment is that they're trying to find savings in NDIS, and is that going to be redirected to aged care? But we never seem to have an honest, transparent conversation with the public from a government perspective about we can't have our cake and eat it too. There's trade-offs. Yeah. And if the current trade-off the government are choosing is to underfund aged care, and by underfunding aged care, we are creating a massive bed shortage, which is filling up hospitals, costing state governments a lot of money. We're not solving the problem, but we're also not talking about the problem.
And I think for me, support at home was a step in the right direction, that if people have the means to pay for their care, that they should be contributing to the care. And I think that was very clear in all government reports that the sector is not sustainable with the level of demand. And you look at the macro population statistics, you need to be thinking about a different way in terms of people contributing to care as it exists. So I think for, when I look at the sector, I think support at home is a step in the right direction to say, if you can afford to do so with really great financial hardship provisions, you should be contributing to your care.
Yes, of course.
And I think we'll potentially see that move forward more and more in terms of a greater level of expectancy across older people accessing care to contribute.
Yeah.
Is how I see it going.
And I guess that's where the health was meant to be playing. But again, we get crumbs of information. You get pushback from media and whatnot when providers do actually try to implement certain things. Maybe some of them were a little bit clumsy, we could say, in terms of the televisions that were locked away. But it's that constant price-taking attitude, isn't it, that we can't, whilst we say we want innovation and we want to change, there is very little avenue for a provider to step up and do that without copying risks of non-compliance or fines. Sorry, this is getting really positive, isn't it, this conversation? And you're getting a lot of ranting from us. Sorry, Lauren.
Not at all. Not at all. It's fantastic.
So your October 2025 Productivity Commission submission argues for moving from compliance-based regulations to continual improvement. What actually is broken now, and what does continual improvement look like on the floor of a facility?
Yeah, I think that report, I quite like our comments in that report. And when you look at what the Productivity Commission put out as well, I think it's really interesting to look at what's being focused on in terms of particularly the care economy. In terms of continuous improvement, I think the Aged Care Quality and Safety Commission had already set an agenda to be more focused around continuous improvement, to be playing a greater role supporting aged care providers, particularly where there was non-compliance, supporting with risk monitoring. So I think hopefully for the sector, we will see that translate through from a regulator into further supports to really uplift quality of care. In terms of on the floor of a provider, I think for me, when you are focused around delivering high quality care, yes, you need to understand what your regulatory obligations are, but really, if you're delivering good, safe quality care, you will naturally be compliant, is my view. Like really, this is not a tick box exercise. And when we speak to providers where it seems like I've got to go in and tick boxes, no, actually, what is the intent behind this? The intent is actually pretty good. Like you want to be, when you look at all of the obligations that a provider has, it's pretty hard to argue with them. It's around how does that translate and how do you actually do that in the most efficient way?
And are you starting to see clients who are experiencing their reaccreditations actually feel that shift from regulated to continuous improvement?
I haven't had that experience. So I know that you have had that experience. So I'm definitely not able to talk to that. But I'm very curious to see how this new process unfolds and how it's embedded across the sector.
Because it is a bit of a back to the future on this one. I think that if we go back to your plans for continuous improvement and the standards 2 standards ago, then this was the language that was used. So it'll be interesting to see how much we bounce back into what we used to do.
KPMG packages a lot of this under humanise productivity. Is that a real change?
In terms of productivity, yes, we want the people to be more productive. I think there is a lot.
Yeah. And that's the tech piece you were talking about, right? A lot of that.
Yeah, I think when we look at the care economy and we're looking at productivity, it's how do you ensure with very finite resources in the workforce space, how do you make sure that those workers are delivering the things that are of high value that actually matter? And how do you take some of that indirect or low value tasks off them? So how do you make the workforce more efficient, essentially, but focused on the right things?
And there's some great tools like, wearable tech for documentation, so it translates your conversation into your clinical notes.
That's
there is some good stuff out there that can make a difference to it. But I think, we with my allied health business, last week we ran for all our managers, we introduced some AI tools to them and how they're doing their rostering, how they're doing their, we do a lot of talks in community groups, generating, topics and presentations. I think so much of the AI adoption, it's a workforce training problem.
Yeah, there's a huge change management piece.
The use of AI and, I probably use it a lot more maybe than Rose does, but the use of AI is not hard. But how do you get a consistent output across your team? It's got to make your care staff's job easier. It can't be an extra.
Yeah.
Can't be an extra task. So I think so much of this is it's actually not as much a tech play as we make it out to be. The technology's there. It's actually a workforce training challenge.
Yeah, I agree. I think when you look at products like Heidi and in terms of Scribe and Evidence, I know from a productivity point of view, they're saving clinicians between 60 and 80 minutes a day. Like that is enormous on the floor of a residential aged care home, or if you're a home care worker. So I think for me,
we use that in all of our physio, OT and exercise physiology consultations.
Yeah.
It transcribes your notes for you.
Yeah. So that's the type of stuff. But you're right. I think from a workforce point of view, we know from the data.
It's got to be inbuilt. It can't be an external system that doesn't talk, right?
That's right. But I think as well, we've got a sector who, and I shouldn't say that because it's very varied, but overall, when you look at some of the statistics coming out of the Australian Digital Health Agency around the digital maturity across the aged care workforce, we've got a very varied maturity across, and tech adoption is huge. So I think you're right. There is a huge change management piece that sits against the workforce.
We've just had a very pessimistic discussion, I think, about the sector. I think we've been quite negative today. However, KPMG's mergers and acquisition teams is actually reporting renewed interest and appetite in investors to invest in the sector, as well as increased valuations of aged care providers. So what are the investors seeing that the sector might not be?
Yeah, and I think as well, whilst we sometimes do focus on the challenges, I mean, this is an amazing sector. We're all in it for a reason. I work day in, day out with very passionate people who are deeply committed to the people that they serve. So I think for us, it's for me in particular, it's a huge privilege to work in this sector. In terms of then broader interests, we've definitely seen the rise of public equity wanting to come in, and also just global interest in the aged care market. So I know sometimes we think that our system is broken, but really we get interest from across all different countries around what we're doing in Australia, because we are seen as very innovative in terms of our model. So I think for us, private equity, when you look at once again, back to that macro population, it's very hard to look at this aging population and not go, wow, we have an aging population, people needing care, higher levels.
Demographics are driving demand, right?
Of course. Look at the demand in the sector. You naturally look at this sector and go, wow, it's a government-funded sector. It's ready for and right for innovation as well. So I think people are very interested in the market. I think we were seeing a level of hesitancy, particularly post Royal Commission, COVID, that definitely dropped interest, and then obviously implementation of the new legislation, new regulatory model, support at home. I think there's been a lot of sit and see, but definitely renewed interest, and Helen and the kind of guys in our M&A team will tell you the same thing.
Is some of that because they're optimistic that there will be changes coming that make the sector more profitable, and maybe the time to invest is now?
Yeah, and I think as well, once again, we've got a very varied market, but we see a lot of providers who are profitable, who are turning a good margin and reinvesting and growing. So I think once again, yes, the market is very diverse, but we also have a lot of profitable providers. So I think definitely, but they're looking for certain aspects within those providers in terms of where to invest.
Segment, rather than the broad market.
Yeah.
Alrighty, so if I'm a board member, I've got a board meeting tomorrow night. I want a one-page report, standalone, partner, merge or sell. What's on the page?
I think you need to be looking at all of those things. I think all organisations are different. You'd want to be doing your scenario modelling around where your organisation is, what your strategic objectives are. I think if you weren't considering all of those things, then, potentially doing yourself a disservice. So I think looking at all of those, I think when you look at if your sort of agenda is growth, when you look at where most of the growth has come from, it's definitely in the M&A space. That acquisition has been critical. Look at Australian Unity in terms of their growth. That all came through acquisition. So providers who want to grow and grow quickly are really looking at the acquisition. There is naturally organic growth in our market. So you will naturally be continuing to grow, but I'd be looking at all scenarios.
It really sounds like the growth is constrained by your ability to supply.
Yeah, at the moment, yeah. I mean, even just providers that we've been speaking to want to refurbish existing stock but have nowhere to put the residents. So once again, when you've got such demand and occupancy is so high, how do you even refurbish in this market?
Absolutely. Like we were constantly working with different providers, and if they could do it in overnight and we could just, magic
Done.
it away or do it around the residents, then you'll do it. But if I'm wanting to refurbish a 20-bed home, I've got to take 20 residents out of their home over some time. So a lot of the time the cost of refurbishment is in staging because there is nowhere else in this community for this person to stay.
Yeah, absolutely.
And so it's a real kind of damned if you do, damned if you don't
Absolutely.
situation.
And the ethics come into that as well. So I think, providers are then struggling with that. So it's going to be interesting to see with this level of demand.
If you've got the Minister for Aged Care, Lauren, on one of your forums or webinars that you've been running, what would the questions be that you're asking him?
Look, I don't know if I would have questions. I think for me, the advice would be to really go out and keep listening to providers. I think I'm very privileged in my job to hear from a varied executives, people on the floor. Like we just have. So I think for me, it's just go out and listen, and you get.
What are the providers telling you they want though from?
I mean, of course, providers want more funding. That's what I hear time and time again. But I think there's a few things at the moment that we're hearing is funding is problematic. The margins aren't enough. Providers want to be investing in technology systems and AI, but just don't have the spare cash. I think the infrastructure is another one in terms of the incentives needed to actually then turn soil, but the refurbishment. So I think there's some really big things. I think probably the thing that I'd love to potentially is around this broader, when we look at long stay older patients, we look at the health system, I think we need some really big, good discussions across the care economy around how we deliver care and deliver it efficiently. Yeah. So in our productivity report, for example, it was looking at regulation across providers who are delivering multiple services, not just aged care. When you're delivering aged care and medical and disability and childcare, you've got multiple regulatory bodies and you are meeting multiple regulatory requirements.
Some are state, some are
data,
federal.
Yeah, absolutely. Reporting going out. So you've got all of these systems, which then is just consuming so much and requires so much resource. So I think for me, it's thinking about how do we actually harmonise some of this to actually make sure that providers are doing it and doing it in the most efficient way. And I know I keep talking about efficiency, but I think that harmonisation, and I know that was talked about in the Royal Commission between disability and aged care. I mean, we've taken one little step in terms of worker screening, but I think there's lots of opportunity to really start to reduce some of the burden. And I hear that all the time. The regulatory and administrative burden on providers is huge. So it's providing data is important, but I think it's then just thinking about the cost of that at a provider level.
One thing I think listening to you today, what I'd love to talk to the Minister about is that we should be able to use RAD funding to invest in technology. It's currently not a permitted use of RADs. So it means for small standalone providers, some of these investments are big chunks of money. We've come off years of losses. Yeah. They actually don't have the cash, even if they have the interest or the plan, they don't have the cash to pay for it. So
because of the you can't use the RADs for it.
You can't use your RADs. It's not a capital growth. So I think that's a really kind of interesting thing to put on its head, because we know that good tech will give us more time with the residents, just like a good building will and a refurbishment, and it may be able to shift the margins to allow you to invest more money.
Yeah, absolutely. Or if you've got a staff member spending 10 days on a report who can spit it out in 3 minutes, I mean,
absolutely. Yeah. Net win, right?
Yeah, absolutely.
We had a good chat before, Lauren, about, you said how many people have been really successful from our small country area. You know, you're a professional netballer, Swifts.
Yeah.
Swifts. You know, you're now running a department at a Big Four firm. What is it that you think that people who have that regional country upbringing, or is it something in the water at Yamba?
Something's definitely in the water. I think for me, I'm so grateful for my early experience. I think for me, the growing up in a community like Yamba, like how lucky were we, honestly? Like it is, I mean, the most best town in Australia, hands down, but just a beautiful community, lots of protective factors. I felt so lucky to have grown up there. I think for me, being a professional athlete just taught me so much that I've taken into my professional life. But for me, as a regional kid, I never saw limits on what I could do. I think I was always intrinsically driven. And I think that work ethic that I learnt as a young person, particularly from my parents, followed through into my sporting career and it's just followed through into KPMG. And I think for me, I love high performance environments. So for me, it was a really great fit to go from like sport, and then I've loved the sector that I've worked in, but I really find I like the kind of environment in which KPMG operates, which is full of people who are very high performers.
I think a lot of it is you have to go the extra mile to succeed, right? Like,
Yeah.
you know, it's a town of 7,000 people. I live in Maclean. You know, the next town now, I think it might be 3,000 people, Rose. And, you know, if you want to access opportunities sporting-wise, you're travelling a long way.
Yeah.
You don't have coaching available.
Yeah.
You've got to motivate yourself, right? And you know, we don't all have it at our fingertips in the
City Slickers
Brisbane.
here.
That's right. My mum, I used to, when I was driving home, I'd say, "Mum, stop the car," and I'd run home beside the car. Like that was my training. I'd sprint home for kilometres beside the car and she'd just drive really slowly beside me. You know, like this was very different to my dad had weights for me. This was very different to my Sydney teammates who were training in Sydney. I'd fly back and
they're
forth.
in academies and they're in.
My mum was driving me to Ballina. Like, you know, she'd work all day, work 3 jobs. She'd be driving me, like just the effort to put in. But yeah, you're right. I think it then.
Sounds like my life. I hope some of mine are professional athletes. That'd be great.
Well, yes. I mean, that's the other thing. But I also think I never got any pressure from my family. It was all intrinsically driven. And I think that's a difference,
that
right?
is the
Is
difference.
like, you've got to want it. Because if you want it, you'll go after it.
For sure.
One question, if I can ask off script. So KPMG can work with small providers.
Yep.
How, if you're a small provider who might not think that they can afford to work with KPMG, how is it best to access some of the grant funding that is available?
Yeah, I think the department puts out fantastic grants for the sector. I think they do a really good job, particularly those targeted at First Nations providers or regional, rural and remote providers, particularly those MM5 to 7. Yeah, I'd have a look on the department's website or in terms of their sector supports. There's a few ways, and they've got a range of different providers who then deliver supports to the sector, and we're really lucky as KPMG to be one of some providers who are delivering that care and support.
Great. We might put in the show notes how they can get in touch with the department.
Last question for the CEO listening, because they're all listening. I think, Rose.
Of course.
You said they
Number
all
one
are.
podcast.
Absolutely.
Thank you. What's one thing from the 2026 report you want them to do something about this week?
Yeah, I would say, I mean, I feel like I sound like a broken record here, but I would say just to be thinking about technology and AI. I really think that if you're an executive sitting around the boardroom today and you're not thinking about those things, that's probably a missed opportunity for your organisation.
Drive down corporate
What
costs.
does this mean?
Yeah.
Just what could this do for us? And I think as well, just being really curious about that. I think a lot of boards that I speak to and a lot of executives are still on that journey. And once again, we're seeing, providers who are much more advanced than others, but then some who are just a little bit fearful about AI and are not really sure what this actually means and their level of risk and their risk tolerance around some of this. So I think it's just to get curious, see what's out there and look at how this can support your organisation moving forward, because I think it's going to be key to sustainability.
That was actually the second last question because we skipped a good question.
So, wrapping it up on a more personal note, at some point in time, your parents or your aunties are going to need aged care, support at home or residential or alternate. You'll be the one that the family looks to as the expert. Does what you know about the system make that decision for you harder or easier?
I think it's always a hard decision when you've got a loved one who's deteriorating that needs care that you can't be providing. So I have been in that position with my nan. She was in Yamba, so we're very limited with the choice there, and that was really tricky. My mother-in-law is also
It's hard to get beds, right?
Yeah, absolutely.
There's one, and it's not bad. It's a great aged care home in Yamba, run by Uniting, but there's one.
There's one, yeah, absolutely. And I think for my mother-in-law, where we were trying to find care in the Gold Coast, I just didn't quite realise at that point in time. It's different when you see data and different when you're living it from a lived experience point of view. she was stuck in hospital for 3.5 months because we could not find a place, and her deterioration in that space was awful to watch. And then just huge demand. And I'm thinking, gosh, this is a metropolitan location. This is a city. I would have expected this out in regional Australia. So I think where we're seeing that it happen, I think it's really hard when you see that in metro locations as well, where there's so many providers, but you can't get a bed.
And that's you, right, with your connections, your industry knowledge. You know these providers personally.
Yeah, absolutely.
And you still took 3.5 months.
3.5 months. I had Gantt charts. I had looked at star ratings. I'd called. I think it makes it easier because you have the knowledge to navigate the system. But it's when you're on the other side, it's very hard to be navigating.
But it's just such a good example of not funding aged care now to be able to reinvest and build.
Yeah.
That's the real
Yeah.
consequence. And if we don't change it,
completely.
it's not going to be 3.5 months.
Yeah. And then if there's no place and you need a spot, is that actually choice when it's the first bed that pops up? Is that real choice? Is that where we actually would have put her?
Is that going to drive quality?
Yeah. I mean, it's definitely, they would, both examples were quite difficult to navigate. But yes, I'm glad. I think the knowledge is good. That those decisions, particularly when you're making crisis decisions, I think hopefully most people are planning for the future. And if I'm an advocate for anything, it's that people are planning for the future and making those decisions early, particularly from an infrastructure point of view around, is this the right home environment? Is this built to the right standards? Does it have, for my parents, I was harping on about making the right next decision for them in terms of what aging in place would look like, so that if something did happen and there was a health event or, they were in a position where they were completely fine, able to stay in their own home and get the care delivered in. So I think planning for the future is key.
Beautiful.
Lauren, thank you. I hope that was time well spent.
That was time well spent. Thank you both.
Thank you.